Welcome back everyone to Pete's Investing. Here we'll be looking at some car companies that manufacture, automobile companies that manufacture cars, and see how they perform in terms of their share price and if there's any correlation between their performance and what you hear in the news. So we're going to do a quick overview of the charts of these car companies, and secondly we're going to look at the sector and look at potentially which company may be the best to invest in. But first, always remember to review the Pete's Investing channel playlists, and that's where we review the indexes each week, review a common set of share prices of blue chip shares each week. On the weekend we review those, and also don't forget to look at our strategy playlist. That's where we go through the simple trading strategy, the average down process, and some money management ideas. As always, click on the subscribe button to like this video and support the channel, and click on the notification bell as well. And if you want me to review any index or share or commodity, please send me a comment and I'll try and cover it in a future video. So let's get started. So here we're looking at these key motor companies across the world, and you can see there we've got Toyota, Volkswagen, BMW, Tesla, Porsche, Honda and General Motors. Of course there are many other motor companies, but these are the key ones across the world. And in there I've also got the code where they've been traded, and as you probably already know, some of these companies are traded on multiple stock exchanges, but I'm choosing the New York Stock Exchange as the major market or exchange where these are potentially going to be traded, and also the country of origin of those companies where those manufacturers come from. First, let's look at Toyota Japan, Toyota where manufactured in Japan. And what I've done is here I'm trading these as of the beginning of 2019 on a daily chart, and using the CCI 5 as the indicator to enter and exit the market. So each of these spikes indicates where the entry could potentially be made. So when so here you look at the black line on the CCI is the CCI 5 indicator, and the blue line of the CCI is the moving average 20 of that particular line. So here we, for example, in Toyota, we've entered the market here when the CCI 20 moving average 20 broke above the zero, and it's been held there, as you can see there, for a few months since the start of 2019. And I've deliberately gone back to 2019 because I wanted to show the impact of potentially where the market was going quite well pre-COVID, and what happens to these trades when COVID hit. And that's what we can see there. In this case for Toyota, the market took a dive back to that level there. So here we were holding it onto it for most of 2019, and again this is trading on a daily chart. We usually trade these on 15-minute charts, and the exit was made here around October. So we got out with a bit of a nice little profit there. And again, the market entered at the peak of the trade was entered again at the peak of the market here. The market dropped off. We remained in the trade with the same number of shares. There was no need for averaging down, and we exited the market up here probably start of April in 2021. And then we entered the market again here, and the Toyota share price spiked up here, which is a very nice little gain, and we've ended the trades here so far at 14.98 in June. Volkswagen, similar story. We entered the trades once back here in early April in 2019, exited near the end of the year, entered again near the peak of the share price back here at late 2019. COVID hit, share market went sideways for a while, then the market started accelerating again back here in 2021, and again exited according to our trading rules. And our trading rules are when the share price is when the profitability has reached a nice level above our entry price, and our nice level being this little point here, and that shows where, if you look at our simple trading strategy and the average down process video, that shows where the moving average or the average highs and lows of the past 90 days is reached, and that shows you there the share price saying, in this case here, the last price being 326, points above the entry, plus the CCI 20 has moved below the 0. That's where the exit has happened. Then once the CCI 20 moving average is broken above the 0 again, it's closed out. So basically why it hasn't closed out here, again if you refer to the simple trading strategy video from the playlist, here it hasn't reached a profitable stage because here that's where we entered the trade. Here you see it would have been below the profitability stage, and here once the market turned down, we're at a profitable stage, and that's where we get out. So again, the trades here will not exit unless you're in a profitable stage, and B, the CCI has moved below the 0. Next we'll look at BMW, very similar sort of patterns. We entered once here, nice little appreciation in price, got out. Here there was no indicator to buy anymore. As you can see here, the CCI remained below the 0, so we haven't entered the trade yet. And we entered the trade here, just right on after the bottom, it bottomed out here. We got into the trade there, the profitability rose, and the CCI turned negative. That's where we exited the trade there. There was no stage there where we would have entered again, because it needed to break below. And what happens here is one of our trading strategies means it must break below the minus 50 before it breaks above the 0. And here the CCI moving average didn't break below and above the minus 50. It would have been above that. That's why it hasn't entered another trade here. It did come below the minus 50 here, and you can see there that little first bump. It broke below the minus 50, then it broke above the 0. That's where we entered the trade there. Nice little trade. Price went up, and it exited again here because of profitability, and the CCI broke below the 0. Here it broke below the minus 50 again, broke above the 0, and we entered the trade, and we're still open on BMW. So good little profitability on that for the 2 and a bit, well, almost 3 years, 2.5 years trades. Tesla, we entered the trade here, got out there, nice little profit. Again, nice little profit there, got out there, same sort of rules. We didn't enter the trades back here because it didn't break below the minus 50, but it did break below the minus 50 here, broke above the 0, we entered the trade, and it got out there at the peak almost at a nice little exit point when the CCI broke below the 0, came back below, broke below and above the minus 50, broke above the 0, entered the trade, and that's where we are now. So we're still in a bit of a down, prices below our entry point there, so we're still in a bit of a downtrend, but let's hold on to that and see how we go for Tesla. Porsche, again, early on in 2019, good little trade, entered near the peak here, right before it started taking a dive for COVID, but according to our strategy, we didn't exit the strategy again until the price appreciated. We didn't have to average down, it didn't appreciate down far enough before we enter the trade again. And again, refer to our simple trading strategy to understand how far down we need to gap before we enter another trade or to average down. Honda Motor Company, now that's gone a bit sideways on the most part. Back here when we entered in the start of January, it trended downwards, bit of a rise there, just broke above our profitability level there. COVID hit, because we're still in a trade, COVID hit, we're still in a trade, not averaging down at all, and we're still in a trade with profitability breaking above our levels there. So not a huge gainer over the 2.5 years, but still we're in a trade with profitability today. General Motors, again, this has been a nice trade for us. We entered back here early in start of 2019. COVID hit, no more averaging down required, and it's exited here after the CCI broke below the 0, and our profitability was in the positive, well above our high minus low averaging. And we haven't re-entered the trade here because it hasn't gone below the minus 50 yet, so we want to hold off and make sure that it comes down below the minus 50, then breaks above the 0 before we enter any more trades. What we do now is we go through the when we're comparing motor companies, we want to compare companies in the same sector. So here what we're looking at is all those same companies we just reviewed the charts for, and we review the KPIs for each of those companies. And all this data was taken from Yahoo Finance, and here we're looking at the trailing PE for each of those, total debt to equity, return on equity, current ratio, etc. And here we're looking at the trailing annual dividend rate, what it's currently paying. So again, these values can change frequently in Yahoo Finance, so it's best to do this if you want to compare like for like in the same sector. Best to do this at the same time just before you potentially buy a company. What it does down here as well is looking at the same KPIs, it then ranks those KPIs against the respective companies. So, for example, here return on equity, Toyota ranked 5th. So what it's saying is Toyota return on equity ranked 5th in terms of the value. So we're looking at values of greater than 17 potentially, and you can see there they're all less than 17, but that was the 5th value in terms of against Volkswagen, BMW and Tesla. Let's look at trailing annual dividend rate. We see here Volkswagen ranked 1st, and what that shows is, so we want to look at the highest number the better. So let's look at Honda Motor Company. That ranked the highest number, so that attracted the highest dividend, which is 3.07% compared to the other dividends from the other companies. That's why it scored the highest value. So then what we do here is we rank the lower that number the better. So of all these, it ranks which one of these scored the lowest value, scored the highest value, and it ranks it as number 1. So here it ranks Honda Motor Company as the highest value based on all the criteria, followed by Toyota, followed by Porsche. So potentially if you're going to choose one of these companies, you choose one of those 3 companies potentially as the best value. It doesn't guarantee those companies will return the best value in terms of chart performance. It simply tries to eliminate and narrow down the probability of those charts doing well. So if you look at that, Honda, Toyota, followed by Porsche is the top 3. Let's look at the returns on each of those. So again, then we look at the dividend yields. Toyota, Honda, and Porsche were the top 3 chosen from our KPI analysis, and they each returned respectively those values in Australian dollar, in US dollars and in euro. This is all in US dollars and euro, and you can see here that equates over the 29 months what it comes out to on average per month. So again, Toyota returned $52 a month, Honda $24 a month, and Porsche $118 a month. So you've got to be careful as well. Tesla, although it returned the best value overall on a monthly basis, that's also very speculative. It doesn't return a dividend, and part of our strategy as a plan B is to have a dividend yield return on our stock selection. So again, the key takeaways: always remember to compare companies from the same sector, choose companies which pay reasonable dividends, and choose companies which have a reasonable history of chart data. So again, thanks for watching, guys. Always remember to subscribe, hit the subscribe button, hit the like button, and also the notification bell to get any future updates. Thanks, and speak to you guys in the next update.